Well, good morning, everyone. Thomas Montgomery, great to be with you. It's a beautiful Tuesday morning. Today is January 20th, 2026. Each morning at this time, 8 o'clock Central weekdays, we get together and we talk about the grant, strategies, resources. The bottom line is what can we do together to help small businesses legally and ethically access capital? Yesterday, we rolled out the new SPE model, and that page is right here. Special purpose entities. If you know of someone that's looking for a capital raise to start or grow a business, using an SPE is probably the fastest, the easiest, the cheapest way to do it. We announced this yesterday, and we were talking some about the feasibility study, that the hard data that needs to be included in any loan package. And we talked about IBISWorld. Several of you followed up with us after the Zoom yesterday, wanting to learn more about IBISWorld. Well, when I used to work at the SBA, we had a relationship with IBISWorld, so we ran IBISWorld reports for every SBA client we work with. Now, in our current model, we continue to use IBISWorld to get objective data and industry information to build and strengthen the loan packages for clients that are going for funding. Because and I think some of you know this and some of you don't. If we're trying to go raise a large amount of funding, not a small amount, but a large amount of funding, the key is the documentation. Can we show to the lender that this is a low risk proposition? That by the lender loaning 100,000, 250,000, a million or more to the client, that it's probable, that it's likely that the borrower will be able to repay. So part of that is through financial projections, part of that's through feasibility data. So IBISWorld sells these reports, and they're right around $2,000 a report. So quite frankly, you can go directly to IBISWorld and pay them just like we do, but it's about $2,000 per report. So it's not cheap. But this report, for example, is on management consulting. So IBISWorld produces these reports on different industries, pretty much every industry. So depending upon what the client's looking to do, we need to pull in feasibility data. This management consulting fits well because it's what you and I do if you're one of our distribution partners. So the report is packed full of information. It's about 50 pages long, and it has the industry codes, and it talks about global performance and national performance, who the biggest players are. Deloitte and Touche is where I first worked when I got out of graduate school in 1995. That was my first employer, Deloitte and Touche. But the bottom line is it's packed full of data and graphs that we can use to validate the capital request. It includes data of what's going on in the industry, the life cycle, SWOT analysis, strengths, weaknesses, opportunities, threats. I know I'm scrolling through this. You can't read it this fast. But the bottom line is it provides the feasibility data that we can frankly get just about any loan approved. So this is the IBISWorld report for management consulting, which is what we do use for our SPEs. One of you had contacted us yesterday after the Zoom and asked about at the state level. So that's true. So we can look at industry by the national level across the United States, and then we can also run IBISWorld reports, which cost more, of course, down at the state level to see what's going on in a given state. And then ultimately, we drilled all the way down to the county level when we're doing our competitive analysis. So going back to the SPEs, of course, I want to answer any questions that any of you have from yesterday, and then also introduce or reintroduce it to those of you that might have missed. So an SPE stands for a special purpose entity. It is probably the best way, the fastest way, as I stated, the easiest way to help clients get a large capital raise. The concept of an SPE is to use a separate legal entity, which we provide, for the capital raise. So that separates the risk. It separates where the loan is from the operating side of the client. SPEs are sometimes called SPVs, means the same thing, special purpose entity or vehicle. But don't make it too complicated. It's assuming that you're one of our affiliates, is what you and I are doing is providing the client a separate entity to do the capital raise off of that includes what's needed to get approved. And so we have to package it as something. It can't just be an empty shell. So we do call these branch offices, and they're built around the whole management consulting, loan brokering model. So if someone comes to you and they say, "Hey, do you know how I can get funding for my business?" What you may want to do is educate them about SPEs. SPE includes the following, and that's what we're going to go through. First of all, we provide them a clean and compliant shelf corp. Now, again, they might say, "Well, no, Charles, or no, Claude, I already have a business entity." Sure, but we want to use a separate entity for the capital raise to separate the liability, to separate the risk. So we provide a clean and compliant shelf corp, and that would be a C corp, a for-profit C corp. We provide the loan package, which includes the business plan and financial projections. So when we talk about financial projections, we're talking about month by month projections going 36 months into the future. Some people have come to us and they think they can just make up financial projections just out of thin air. Well, if the projections don't match industry statistics, then it's not going to seem credible. So we can't just make up numbers. We need to look at how each industry normally is capitalized and its profit ratios and other key financial ratios. Because if our projections are out of line with the industry, the lender is going to know that and they're going to reject the application. We also assist with the SPE in building out a strong business credit profile. Think of Dun and Bradstreet. We want the business to look strong on paper. So we get the Dunn's number, we build out the profile of the Dun and Bradstreet account, and then we add large primary trade lines. I think it was last week or 2 weeks ago, we added a $177,000 trade line to one of our clients' businesses. So that's important and included. The market-specific feasibility analysis is, in fact, what we started by talking about. So we do use IBISWorld. And again, I'm showing you a resource. You can go buy your own reports from IBISWorld. But again, you're looking at about 2,000 per report. We cover that cost for the grant participants. But we need to, again, look at the industry, and then the way that we set these SPEs up is we focus on the financial competitive and prospects in a given county. So the SPE participant would determine which county and which state that they want this quote unquote branch office to be, and then we build out the data set for it. So with that, is that enough that we've got this foundation? Commonly, it's not, and that's where some clients in the past have become frustrated. They had essentially a shelf corp with some documents, but it wasn't yet strong enough. And so when we built out our SPE model, we didn't want to just stop with those first four bullets, which is a great start, and they are all needed. But beyond that, what we've learned is we want to inject $250,000 a month into that business. And so this isn't them going out and being an affiliate and having to sell anything. We're going to literally provide the client contracted clients. Each of the contracted clients will owe the SPE 10,000. So if we have 25 of them owing the SPE 10,000, that puts us at in first month 250,000, which is awesome. You can imagine if we go to a lender and we're trying to borrow a large amount of money, if we can show them that we legitimately, really have already generated our first $250,000 of income in month one, that's going to get a lot of credibility. In the past, we had people that came to us and they wanted kind of the basic shelf corp, but they couldn't show enough capacity, enough cash flow to support what they were looking for. Now, the projections, of course, can help with that, but you just can't beat good old-fashioned income. And instead of pushing that off to the SP participant in this model, we're going to take responsibility for that. So that would be month one, and that's real dollars. Doesn't have to be paid back. It's not debt. And then also on an ongoing basis, we know a lot of these people that are using the SPEs, this is not really their focus. They have other business dreams, aspirations, and priorities. So we have to make it as hands-off and passive as possible. So for the second to the last bullet, we've went ahead and built that in so we can go ahead and take care of the ongoing client development activities to continue that monthly flow of $250,000 a month. The other revenue stream to the what we'll call the SPE, the branch office, is they are getting paid essentially as a management consultant or what you might consider a loan broker. And again, that's the industry that we're building it out of. So let's say that these 25 contracted clients all want a $100,000 capital raise, which is the minimum we do. Normally it's higher. So let's get our calculators out. So we have 25 clients raising $100,000 through that branch office. That's 2.5 million. And then what happens is that branch office, that SPE, is paid a 10% performance fee, which is another $250,000. So the point is, we're bringing in the clients, and then those clients then are generating income, real income for the SPE. So this package is one that we can guarantee anyone a minimum of a $250,000 capital raise because it includes all three C's. With that, we've set it up where there is no out-of-pocket cost to acquire a special purpose entity. So the way that that works is that they will fill out a funding application, and we're going to be able to support this all through the capital raise. There is a cost for the SPE. It's not free, but it's not out of pocket. There's a $5,000 deposit for them to hold it, and that's going to cover that territory, that given county, and for us to do that feasibility study, like we talked about with IBISWorld, and then digging into the individual counties' activities. There is also a $20,000 annual license fee for the branch office. And you might say, well, that seems expensive, but it's a great deal because their entire out-of-pocket cost for their capital raise is going to be $25,000, and we do not charge them a performance fee. The performance fee that we mentioned here is relevant to clients of the branch office, but not for the branch office themselves. They won't have to pay anything out of pocket. All of this will be paid out of financing. So it's kind of similar to someone that wants to go start a franchise. We commonly use Domino's Pizza franchise as an example. So if you wanted to go open a Domino's Pizza franchise, could you get $1 million of business funding? Probably so. Probably so. But why? Why is it easier to get money for a franchise or a structured business than it is just on your own? Well, because lenders have more confidence in it. It's a model that has already proven itself. This is just a new location with a new owner in a given community. With that, if we don't have an SPE, we can still go get funding. None of that has gone away, but it's going to require more client involvement. And what we're commonly hearing is people want the kind of the done for you versus them having to do any of it themselves. So with that, if we were to go buy a Domino's Pizza franchise, and could we just go get the $1 million loan from the bank? No, we would have to actually have an agreement with Domino's Pizza. We would have to start by having a letter of intent to even start the funding process. Well, that's exactly what we're providing. We're providing the SPE participants an LOI at such time that they've paid that deposit. And then that's going to allow us to go ahead and go get the funding for the business, and then the balance would be paid out of the business funding. Normally, we will go raise 250,000 per SPE. Sometimes we have clients and say, well, that's not enough. I need $1 million. Well, we have to structure the loan so it makes sense. So if we're going to buy real estate, that makes it easier to be a larger amount if we're buying equipment, acquiring an existing business. But a pure working capital loan is difficult to get more than about 250,000 per location. So what we have figured out, the solution to the problem that a lot of people have had in the past is they wanted more money than they qualified for. The solution is have a turnkey structure that we can replicate as many times. So if they needed 500,000, we would do two branch offices. If they needed 1 million, we would do four branch offices. Again, you might say, well, why bother? Why don't we just do one or do none and go get $1 million of working capital? Well, again, there has to be a loan structure. There has to be the reasoning, the justification. And so if what we're leveraging is a management consulting business, why in the world would a management consulting business need $1 million for one location? They shouldn't. Now we can go in and start changing industries. Maybe we want to open a hotel or open a restaurant, open any other business. Then we could maybe justify a larger amount, right? If you want to open a restaurant, you may have to hire 100 employees to get it started. Well, that would warrant a much larger capital raise. But when we go for those larger capital raises, we're going to need the documentation to support it. So we can either do the SPE as presented here off the management consulting slash loan broker model, which can be actually implemented. Or if the client does not want to do management consulting, we can substitute in any other business that they want. It's not going to be quite as prepackaged. So for example, let's say, no, I want 1 million and I want to build this off of a restaurant. Well, that's fine. But then the income streams that we've talked about here for these three bullets are specific to management consulting. We're not going to be able to make sense of these three income streams for a restaurant. So, but certainly, if you have clients that want different industries, we can do any industry. Right now, we have about 5,000 different industries that we have built out reports for. All right. Some of you have asked, well, if you're one of our referral partners, how do you get paid? And it's great because you're going to get 5,000 of that license fee. So you're getting 5,000 up front by referring someone to us that gets an SPE. Plus, you're going to get a residual, lifetime residual override. So what did I say earlier? We're setting these SPEs up as management consulting firms slash loan brokers. We're going to go develop the clients for them because, frankly, we're better at it than what most of them have been in the past. The SPE is going to really be generating income, going to be receiving 10% of the capital raise. That is split 50-50 with us. And of the 50% we receive, which of course is 5 points, we're going to pay you out 40%, which is 2 points. So What a great thing, right? So you can go out, find people that's looking for capital. This is a little bit more of an advanced concept, but it's very effective, and we'll guarantee the 250,000 per if they follow the model. So instead of just going out and just simply offering someone a shelf corp, which is a great start, but it's not enough, it's not everything that's needed, you could offer them an SPE. You make 5 grand up front and you're getting a lifetime residual off of every client you bring. Again, structure of the SPEs, they are set up as for-profit C corps, and we take care of that. They're set up under the Management Consulting Industry Code. That's why we keep referring to this. Uh, we we recognize that businesses that don't have any income have less borrowing capacity. So what we're doing is instead setting these SPEs up to really have real lucrative income. What happens? Well, that's real money going into the pocket of the SPE owner, but also then that is giving us much more borrowing capacity. The third primary bullet here to understand is we're not trying to get these individuals to distract from their primary focus. They don't have any operational responsibilities. We serve as their back office, and that's why there's the 50-50 split. So we can set up an SPE as a branch office. We can provide the document set to be able to get at least a $250,000 loan. We can set it up to actually generate income, which is what businesses should do. And then the money that's brought in through the financing to the SPE can then be transferred without restriction to any other business entity that the owner wants. Therefore, all the risk is housed in the SPE, but the business owner is getting the unrestricted use of that capital for whatever projects they want. So, in summary, why would someone want to do an SPE? Well, first of all, it's designed to really make an adult income consistent with industry standards across the country. Secondly, so month one income as well as subsequent monthly income. And then from a debt perspective, and that's what a lot of people are going to come to you. If you're one of our affiliates, a lot of people are going to come to you, and a lot of them really don't care about earning money. A lot of them don't. What most of them care about is get me debt. Get me lots of fucking debt, is what people will tell you. Fine, we can get you the debt as well. So we're providing the earned income as well as the debt. As Charles is pointing out, it's turnkey, right? So we're providing the entity, we're providing the documentation, we're providing the capacity, the cash flow, we're providing the collateral, and we're providing the credit worthiness. So this is the turnkey structure that many of you have asked for. Now, again, if you have clients that just want to start with a simple shelf corp, my goodness, they can do that. They can go to 509pacific.org and just simply get a shelf corp for less than 500. You have a client that wants to come in and have no out-of-pocket cost, fine. They can go to 509pacific.org. At the bottom or near the bottom of the page, it says free funding proposal. Each of you should have a link, and that link, in fact, is a unique link. So you're able to refer clients in, and you can make 5% of the capital raised by just referring clients in for a free funding proposal. That's great. But for your more sophisticated clients that want a larger capital raise, I think you're going to get the most traction with the SPE. So, who has questions, comments, concerns about the SPE? And again, if you have questions, you can contact us directly. That's our phone number. Some of you like to call our text line, which is a text line. All right, so who has questions regarding the SPE model? All right. Mary's asking about those legacy shelf corps. So yes, we can certainly, anyone that's currently in the system, like Mary, that would like to switch over. So they already have a shelf corp, but they would like to switch over and use the SPE. I think that makes a lot of sense. And yes, we can absolutely facilitate that. So any of the clients that are currently with us that wants more of the turnkey package, absolutely. Eric is asking about how I guess how does he get paid for this? And so we talked about Eric how the mechanics, but you can get set up as an affiliate crazy easy. It doesn't cost anything to be an affiliate, you know, to buy anything. There's no risk. You just simply go to our website, eric509pacific.org, and you can become an affiliate. It'll take you a minute to fill out the little form. We'll get you set up, and then you'll be authorized to offer the SPEs, which is great. Because again, the design of the SPE is no out-of-pocket cost. Because I think that's the concern that some of you have is if you go out and you start talking to people, people often have the hesitancy to spend money, understandably so. But the SPA models no out-of-pocket costs. They're going to come in, we're going to be able to structure financing to cover their deposit, which will hold the SPE, develop the letter of intent so we can move forward with financing, cover the cost of the feasibility study that we talked about, doing market specific analysis, and then their annual license fee also comes out of financing, not out of pocket. So that's an important point to pick up. We're not asking clients to pay anything out of pocket, nothing out of pocket. Now, is there a cost? Sure. You're looking at around 25,000. But can you imagine going to Domino's Pizza and saying, I want to have a Domino's franchise, but I don't really want to pay any money. But I also want to use that Domino's Pizza franchise to go get $1 million loan. Would that be okay? Well, no. If we're going to have a real business, it has to be a real business. Now, we can outsource all of the operations, which is what we're doing to keep this from being a burden. But it's a remarkable model if you have the aptitude to understand it. If you don't understand it, you might be better off just sticking with the simpler offerings. John's asking how to enroll an SPE client. So first, we need to make sure that you're set up as an affiliate, so you get paid, which of course, John, you are. And then at that point, our first step is to go ahead and get them a funding proposal because we need to start getting them the capital to be able to cover the SPE cost structure because we don't want it out of their pocket. So you'll have a link that looks just like fundingproposal.org, John, and everyone else. And so they're going to come into the system by filling out a free funding proposal. From that, they'll get their funding offers. The funding offer should be more than enough to cover the deposit, more than enough to cover their annual license fee. And that, of course, allows us to get you paid. Then we build out everything for them, do the feasibility study, the market specific data, and then they're able to go get that 250,000 or larger loan, which was the third of the bullets. Okay, last question, and we'll hang it up. Cameron's asking about the frequency. Let's see, what is the pay frequency of the financing? Okay. So, Cameron, when you have a client that's a prospective client that's interested in SPE, everyone should be an affiliate. All the affiliates should have a link for a landing page. You drive people to your landing page just like you've always done. And then what will happen is they'll get offers and they'll get offers from about 40 different lenders to be able to cover their cost. And from that, then they will be able to move forward with the SPE, the branch office, so we can provide everything. But the payment frequency, I guess, is this question. You know, normally it's a monthly payment. All right. Well, hopefully that's not too much. This is built off of what we discussed and introduced yesterday. This is really our focus going forward in 2026. We spent about 8 months building out the SPE model, and some of you have been part of our beta testing where it's worked remarkably well. We guarantee in writing if they follow this model, they'll raise at least 250,000. Again, I know you have a lot of people that want more than 250,000. How do we respond to that need? Then we open multiple branch offices. It's very difficult for one branch office that's set up as a management consulting firm to go borrow more than 250,000 of working capital. It doesn't make sense. Therefore, we either need to change the industry to something that would support a larger capital raise per location, or open multiple locations. But I think you're going to find a lot of interest of people that would like a legal, ethical way to raise $250,000 or more with no out-of-pocket cost. And not only is it a vehicle to go take on debt, it also is a vehicle designed to generate considerable cash flow without them needing to be actively managing it or running it. All right, thanks everyone. We'll be back tomorrow morning. If you need anything, best thing to do is either go to our website, 509pacific.org, and or give us a call, 903-352-3390. We'll try to answer the phone live. If we don't, leave a message and we'll get back with you. Thanks everyone. Have a great day. Bye-bye.